All right, so I think I've got a good one here, I believe. So we're gonna have to. Okay, this cannot be black. So this video, you heard the title, you saw it, and this is the correct. Indeed, it is. The basic point or premise is that net worth should not be the deciding factor in who your mentors are. Now, this does sound contradicting. You know, I'm someone who is a follower of the Tate brothers, a supporter of the Tate brothers, including those professors within his school. But you got to consider there are mentors in life who have just as much, if not more, value to you than someone like Tate. You know, we can take someone like Tate, for example. You know, we'll do black because he's half black. And with Tate, he's extremely wealthy and exceptionally good at that, right? We know this is true. Just trying to draw a beard here of some kind. I don't know. It looks pretty bad, but here we go. Chud version of Tate. And he's got hella racks on him. That's why you should listen to him. Because even if he doesn't know very much about something like crypto, even if he doesn't know very much about the business himself, he has found a way through traditional business means, and you can look into the nitty-gritty of it, you know, through webcamming at first, through strategic business investments, through securing deals, through casino constructions and operations. House always wins, right? Great business model if you can afford to start it up and maintain it. He has the means to get in contact, to network and pay and work with the people who are experts in different things. Hence why he has a crypto professor, a hustling professor, a copyright professor, an AI professor, a content creation professor, a trenches or DeFi professor. He's able to surround himself and gather a cabal of people with various skills. Must have clicked something, but to the point, he's got these people here who are of very, very high skills all around him, right? And that is why someone like me or anyone should be inclined to listen when a rich person speaks. Now, you can disagree with the philosophy. For example, I'm not a Muslim, I'm a Christian. Ignore the Muslim part. He barely ever talks about that anymore anyway. You really look at the hard work, what he did to get to where he is today. But then you've got another mentor. Let's say you have a monk, right? And this guy has no money, right? His wallet is empty, but he has wisdom. He's mastered a life of discipline, right? Someone like Tate used to drink, still smokes, consumes nicotine, has celibate women, same with his brother. And of course he's rich, he can afford to do that. But you're going to learn your best, you're going to get your best tips and discipline and accountability from someone who you know who is more like this, whose whole life focus is discipline, right? So in a way, in certain aspects of what you're trying to improve, you want to focus and find people who are the best in that, which is why, you know, you find Tate and then you effectively use him to funnel yourself into, let's say you're like me, and you funnel yourself to the crypto campus and the crypto professor. And in this case, this would be Prof. Adam, right? And then you follow Prof. Adam on other social medias. You read, learn the lessons, learn about him, the methodology, what to do. You watch analysis every day, his daily investing analysis, and you stick around for the questions because there is good information and lessons and alpha in there too. Questions that you probably did not know the answer to, or that you would have had eventually, answered by someone else who asked it first. These guys are all rich, not the monk though. And in my case, right, I don't sell a course and I don't do any teaching. Eventually, I do intend to offer that to people who are interested and want to do that. And I do want to wait until my net worth is significantly higher than it is now. However, I want to take some people, I want to take an example, and let's select all of this and get rid of it. So take an example of, you have Professor A, right? And then you have, let's see what's going on here. Phone's buzzing. Okay. Professor A, and his net worth is 1 million plus. And then you've got Professor B. His is 500K plus net worth. And then you've got Professor C. And let's say his net worth is anywhere from only, 10 to 50K. And this is only including liquid assets from earnings. So already the caveats are present. So what's most likely the case here is that Professor A has most of his net worth from things like real estate, maybe other things he owns. Maybe he owns some nice cars, maybe a nice car or two. He has stocks, and you know that he has crypto. And for the premise, I forgot to mention, all of these guys are offering to teach you crypto, right? Now, you have also in this example, you could even say they're all charging $50 a month for you to be in their community group in a course. We could just say, that the first one's charging 75, second one's charging 50, next one's charging 20. And we look at how this guy here got to 1 million, and he admits that he took a $100,000 investment and put it in Bitcoin in 2019, and he's been bag holding it the whole time. He bought Bitcoin at $4,000, and he's sitting at $60,000 right now, and he has 1 million plus net worth, right? He rode that up. And he's teaching you how to get into crypto, how to build your net worth and other things like that. And then you have your 500K plus net worth guy. And let's say that he did a similar thing, except in 2022, what he did was he bought the bear market dip on Solana. So he bought, $10 Solana with, $50,000. And from there, he got into some altcoins and DeFi trading and stuff and has a little bit of experience with that. And now we have this guy at 10 to 50K. And what he's done is he has taken $1,000 and through an investment strategy, right? So we'll call this little funnel here S1 for strategy 1. He deployed long and short sales in the crypto market, let's say from early 2023 to present day, right? And I think we'll do a different, there we go, to today. And he's turned that into, let's say, $50,000. So, this guy got a crazy %X return over 6 years, right? From 2019, technically 7 years now, it's 2026. So 7+ year development, right? And this guy, in about 3 to 4 years, secured, what would that be? That would be a 10x, and then with this guy, we have a 50x, right? We have a 50x return over 3 years. And so I think you're understanding the point I'm making. What's interesting is that you really can't go wrong with either one. You got to identify what your goals are, what your net worth is, and what you're trying to do. But I think if you come across somebody who was able to turn $1,000 into $50,000 without gambling, without buying a meme coin or a pump fund coin, right? He was able to do it by investing in only Bitcoin, Ethereum, and Solana, right? So he rotated between the 3 major coins, provided a strategy. It's basically what I did, right? And it's basically what the real world has done as well. Basically the same thing. And of course, my idea first stems from them. Credit where credit is due. And the way I have done it, I have managed to produce far better returns because while the RSPS is what Professor Adam calls it is in cash, most of the time my system aggregate of systems, or my dashboard, is shorting the market 1x. And typically when we short the market, we do higher beta like Ethereum, Solana, and consider altcoins as well, usually. Problem with sometimes doing altcoins, and this is a digression, is that sometimes they'll be like this. You'll have an altcoin trend and it's going down, and it's like in this range right here. You know, it's already down 75% when Solana is only down 50%. But then you have a move which is in the altcoin price where it spikes upwards like that and then starts to fall off a cliff again. And you see, if your system did not have you short here at the top of consolidation, you shorted here, there's a time period where you kind of get faked out and you're at a loss. What do? You know, any trend system or indicator, mini TPI, we call it trend probability indicator in the real world, would probably have you exit the short position and go back along. But in my case, and in I'm sure the real world's case, Bitcoin would still be going down and everything else would. So the overall market trend would be bearish. So you would literally hold and be fine. But that risk does exist. And I think a more accurate example of what really you should be worried about is like if Bitcoin goes down, you know, and you go short here, right? And let's say on this date, you know, the altcoin is topping, right? And you also enter a short on the altcoin and it goes down a little bit. Surprise spike pump on some news or something, you know, that's what I'm talking about. And then it, like, let's say it stays up here a little bit as Bitcoin like does a little mini reverse relief rally, and the altcoin stays up here for a while. And this is where, you know, with our strategy like we do, and we talk about it in the server and we have some lessons on it for those who are interested, is, you know, that's whenever you look at, you know, Bitcoin dominance and all those things, and then you look at Bitcoin dominance plus ETH dominance and you denominate it in others dot dominance, and you look at all these other metrics to really determine, okay, what stage of the cycle are we in, what needs to happen, what is most likely to happen here. Bringing it back, I guess, full circle in the 12 minutes that I've been talking about this, look at it this way. If you're young, you want to be aggressive. If you come across, let's say you come across me again, and I developed a system where I took $1 and I turned it into $1,000 in 3 years, or even a little bit less. And I show you how I did that, and it was not absurdly risky. Right? It wasn't meme coin trading. It was a robust series of systems. You know, there's a long-term, right, trend probability indicator to try and get us to go to the upside. There was a medium-term trend probability indicator that's designed to let us entry in on a long up trend of a medium-term scale. Time frame, excuse me. You know, we also had a market regime detection system, right? That's trying to tell us if it's a trending market or a consolidation phase. Followed with a short-only system. We call it an SOS in our server, right? That's designed to deploy your capital and optimize for making gains on short selling Bitcoin and, as an extent, the rest of the market. And then even a dominant denominator system, the DDS, if you prefer to avoid the theoretical risk of liquidation and short selling, right? And you want to hold a dominant denominator, such as gold, the euro, the Dixie, the DXY, even copper or silver. Of course, we stick to these four in our dominant denominator system. And of course, with the short-only system, you could have a limit to where you only deploy 50% or less capital maximum to this, which protects you when you're in cash, right? You could have 50% in the dominant denominator or just in dollars, and then 50% speculating on the downside of the market. And then, of course, the other system that we include, right? So we have dominant denominator, short-only, long-term trend probability indicator, medium-term, and market regime system. We also have a strategic dollar cost averaging system. And in that one, right, keep in mind, all of these are from the real world. I learned LTPI, MTPI, SDCA from the real world. Short only system, I believe it's SOPs in the real world. I have not gone that far into developing that. I have chosen not to get developed into Pine in script and furthermore in the levels because I have other career pursuance, like, getting licensed for financial advising, getting a legitimate career outside of crypto, to have good flow, and to also be licensed in financial services. That is what I am doing outside of this. It takes a lot of time. I'm hard pressed for time to do this already. But to the point, I by myself developed the criteria and everything for the short only system, with the realization and inspiration from the real world. The dominant denominator system did not learn how to make this from the real world, but they came up with the idea of it, right? And with these, back to the SDCA, it's your market valuation system. And I have a dashboard, effectively, that is comprised of all 6 of these systems. And it'll tell you, what are we doing today? What is happening in the market? And I was able to turn that $1 into $1,000 in 3 years. That's a 1,000x. I think it is wise to pull up a calculator and check this out. Thought experiment, like Tate says now. He's big into thought experiments recently. So 1,000x on the money. So, if you took your $5,000 and you ran my signals, didn't even develop your own strategy, which could yield more depending on your criteria or less, right? This is theoretical, right? I think something more realistic would be from 2022 or 2023 to now. Let's say that instead of 1,000x, we were able to secure a 250x. I think that's reasonable, right? So you took your $5,000 and you were able to secure 250x from that. You can become a millionaire. And even with more money and you run the system and you stay consistent, you stay aggressive in the market, this is where you can get, and this is where we are going. We understand that the roadmap is going to change. Price is going to do new, different things. No one knows what's happening, but we understand the long-term roadmap to success is constantly adjusting and adapting. And if someone like me, for example, tells you that I did this with $1, and now my $1,000 I'm deploying into further development and into these systems and doing this again, right? And then I'm making revenue from people joining my course and using my resources. It then gets to the point where it's like, okay, I'm going to be extremely wealthy soon, and I'm offering to show you how I did this, and I'm not even going to remind you. You've already thought, with my $10,000 that I'm ready to invest, I could be a multimillionaire in 3, 5, 6 years. No guarantees, of course, but I could be. Am I willing to take this risk? Right? Are you willing to take the risk to learn what this mentor did, what this person did with $1? Are you willing to try and figure out how you could do something like that and replicate for yourself and move forward? So, answering the question, I don't think the net worth matters. I think what you have done matters the most. Now, usually what you have done, right, there's results, there's obvious things about the person and their knowledge, their wisdom, what they possess, what they've earned. That's a key telling of whether they're worthy or not. If they have the merit to teach. And I just simply don't think someone like myself, I haven't done a 1000x. I think the system from this point has gotten, closer to a 50x. Not exactly sure what it is now. We shorted the market on Bitcoin. I think I need to get out of this to boot up TradingView. We shorted the market after the October 8th nuke day. So our SOS was deploying it, right? And that's the theoretical return of the assets, right? Because the finished SOS system had us get out on the 10th of February, right? So we're doing okay. For those of us that entered in when it was only halfway complete and the criteria wasn't even fully established, We're like, okay, 50% capital deployment. We're just going to long-term short until it tells us to buy back. And 43% on Bitcoin, right? That does a lot to help you. Because even back then, I remember the long-term system went short here, and the short-only system did not go short until this point, right? But if all of your long systems are short, that is a justified entry into the short position, right? And at this point, you could close the video. I think I've made the main point. Now I'm just bragging and talking about the system because I think it's very important, right? And one of the blips of the tariff drama is that it did not get us out, right, until here somewhere. There were no gains in the tariff situation. But downtrends like these have been overdue in Bitcoin's price for a very long time, I believe. Because think about it, what's even happened, right? We've been climbing up, V reversal, consolidation, V reversal, consolidation, mini nuke, comeback, explosive, great consolidation of 24, explosive, consolidate, many little bear scare, and then kind of like a retarded looking bull sideways rally, and then a major dip that does major liquidations, crazy levels of losses, gives us peak valuations. In the dashboard, it's funny, the SDCA is flashing like crazy right now. It's maxing out on everything, which, to be fair, there is a point in time in the back test of the SDCA where it was flashing maximum amounts in this zone here. So on this candle, this is black, we don't need that anymore. In this candle, in this one, it was flashing maximum undervaluations, right? And a lot of us would have been scaling back in here, right? And then it went lower. And then the valuations did not come back to this level until we were in this zone. And I think the mathematics for mine capped out. It was 2.7 to 2.9 in this range, and actually getting 2.9 and close to 3 was in this range here. More specifically, this zone right here. And then the bottom was in, which in hindsight was great. But, in the real world, if you were in at that time, if you were an OG, you would have saw that Professor Adam and the Masters were at a good consensus that, the bottom is in. And they were right. And, the kind of consensus now is that, the bottom is probably in here, but it can get worse. And we talked about that in yesterday's analysis. Video is up on my channel. But, of course, as always, we'll be back on another day to put the work in and provide the analysis. So, God bless, and I'll talk to you later.